Everyone, thanks for joining us today. Just ticked over 12 o'clock. I might wait a minute or so just to give some people some more time to log in. And if someone wouldn't mind letting me know if you can hear me okay, just a sound check, just in the chat box, that would be great. Thanks. Thanks, Ingrid. Thanks, Michael. Thanks, Michael. Thanks, Tom. It looks like most people have logged in and are online now. Thanks, Belinda. Thanks, Mark. Might get the session started. Thanks, everyone, for joining again today. We'd like to make this a recurring series. Had great feedback and a great turnout last week on the session. So by popular demand, I've brought Jimmy back to do a part 2 of our session from last week. Hi, Jimmy. How are you?
G'day, Blake. How are you? Hi, everyone. How's everyone? All good?
Yeah, great. So if anyone watched the session last week, we dove into 3 stocks, spent a little bit more time on those stocks, having a look at, the charts and trade setups and the underlying commodities. Had some great feedback from that as well. So looking to do something similar again today. And for anyone that tuned in live last week or watched the recording, might know that I had some technical troubles with the slides. So I've done some work making sure that they're on and up and running. So fingers crossed for second time lucky that it all works today. All right, let's jump into it. We'd love to make these sessions as interactive as possible, as always. So we're picking and analysing stocks voted by everyone in attendance. So if there's a stock you'd like to cover or like for us to cover and to have a look at, please type them in the chat box. I've already seen some requests come through already, so thank you for everyone that's done that. But any stocks you'd like to see, type them in the chat box. Any questions as we're going through today, feel free to type them in as well, and we'll do our best to answer all of them. But, as I said, we'd like to spend some more time on each of these stocks. So, good 10, 15 minutes. So if we don't get to your stock today, we'll have to continue this series and keep going through all the stocks that are being requested. Okay, great. The rest of the housekeeping today, as always, our disclaimer, any advice contained within this presentation is general, does not consider your personal circumstances, your financial situation, or your needs. You should consider whether it's appropriate for you. Of course, past returns are no indication of future returns, and trading options, as you all know, is not suitable for everyone and can be complex and high risk if you don't know what you're doing. So anyone new tuning into these sessions, please, speak with a licensed professional, do some research, understand how options work before you start trading them. I mean, use a simulated account. We've got those available on our website too. So make sure you practice and you get up to speed with what options are and how they work before committing and jumping into the market. Okay, let's jump into it. I mean, Jimmy, we looked at the ASX 200 last week. There's been a little bit of news that came out. The Federal Reserve announced throughout the week, and we've had a bit of volatility on the XJO. What have you seen over the last week?
Yeah, pretty much. Yeah, you nailed it as well. So you had the Federal Reserve, Blake, and you also had the RBA this week as well. So they've pretty much gone together, pretty much doing mid-month now. So obviously the RBA changed, obviously from the first Tuesday of every month to obviously going mid-month. I don't think they're doing 10 times or 11 times now. So I think they're going to cut back on that as well. So anyway, the point is obviously, look, the market is expecting one thing, guys, and I think we spoke about it last week. Does anyone remember what it is? Everyone's sleeping for a Friday, Blake. There you go.
We'll give them some time to answer, but it's rate cuts, obviously.
Yeah. Well done, Ingrid. Cuts as well. So rate cuts as well is the theme going on. So they're expecting interest rate cuts to happen. So as I said as well, we're expecting, well, me personally, I'm expecting a cut in probably July, June sort of July sort of period. And then it looks like the Fed want to do probably 2 to 3 cuts this year. And then you pretty much will have probably Europe follow, and then you probably have Australia follow as well. So, expecting probably 1 cut from Australia here as well. We might get lucky with 2, but obviously that's where it's at as well. So the market is reflecting that as well. So anything else is pretty much noise at the moment as well. So if they get cuts, I don't know if economies are booming, Michael. Okay, that's I don't know. It depends on how you look at it as well, but the market just wants rate cuts as well. And that's about it as well. So the 2 things that you just got to keep an eye on personally is obviously what the central banks are doing. And also I think the most important thing for us is inflation. But the way they're looking right now is I think inflation, they're saying it's under control. They're telling us it's under control, so they just want to cut, and that's where it's at as well at this stage. So we will bring up the bond market, and you can sort of get a feeling of where they're at. Okay, but this market is unbreakable at the moment, unbreakable at this stage. So, and I don't think it's going to break until probably closer to the end of the year. That's just my view, but we'll wait and see how that goes as well at this stage.
Yeah, we've had some great bullish momentum, Jimmy. Obviously, with the Aussie market, we broke all-time highs.
Yep.
I think that was at the start of the week or late last week.
Yeah, it was late last week. So we hit the 78.30 level at this stage. So obviously that's the peak as well. But as you can see in the US, all 3 major indices have gone record high as well. So the Dow, the S&P, and the Nasdaq have all done record highs as well. S&P unstoppable at the moment. Do you know what I mean? So is there a pullback going to come? Yes. Okay. There will be pullbacks. Okay. But any pullback to me, it looks like at the moment is being bought up as well straight away. So that's where it's at. So yeah, the key to it all, guys, as well, and this is probably, I know I've mentioned it 5 million times to you guys as well, is the bond market as well at this stage. So the bond market usually gives you the telltale sign that it's all good. Okay, if they can keep that sort of suppressed, okay, and looking like they want to sort of push it down, this market will go up as well. So that's where it's at.
Yeah, great. So when you're looking at the bond market, Jimmy, do you look at both the Aussie bonds as well as the US bonds?
Yeah, so what I look at is the 1 year, 10-year for the US, and obviously the same for Australia as well. So 1 year and 10-year as well. So what you want to see, guys, is also the quick way to sort of learn quickly on bond market. I won't cover because bond market it's a bit more complex, but the quickest way is always know where the RBA rate is or the Fed rate is. Okay, and then just work backwards as well. So if you bring up the 1 year bond as well, I think the 1 year bond in the US is running at around 5. Okay with that. Yeah. Their cash rate at the moment on the Federal Reserve rates are at 5.5 at this stage. So assuming they're at 5.5, how many cuts usually if it's 25 basis point a cut, how many cuts are they expecting, guys, in the US for the year?
Well, it'd be 2 cuts, wouldn't it? 5.5 to 5.
Correct. Yeah, that's right as well, Blake, as well. So they might get lucky with a 3. Okay, so they're expecting 2 cuts as well. Yep, well done, Trevor. Okay, and in Australia, if you bring back the Australia one back, Blake.
Sure. Let me get through to that. That's just on the next slide here.
Yep. Well, Australia, the Australian one's running at around 4%, 4.0, whatever it is at this stage.
4.01. Yep.
4.01. Okay, so our cash rate at the moment is 4.35. Okay, so right now they're expecting 1 If it drops a little bit further, it goes to 2. Well done, Ingrid. Well done, Steve. Okay, well done, Belinda before, and Trevor. That's all it is as well. So we might get a rate cut within the year. Okay, that's one rate cut as well. So obviously that is a change of tune from the RBA telling us they're going to raise rates. And, you know, the US, they've been talking tough. Okay, they might do it as well. And away we go. Well done, Ingrid. Getting better at maths. Well done. So anyway, that's good as well, guys. And that's probably the key to it all. As you can see, if that sort of jumps up, okay, if the 1-year bond or the 10-year bond starts pushing up as well, then you've got warning signs, okay? But at the moment, as you can see, it's all suppressed. So it's all staying at those relative levels. If you start seeing it falling, guys, as well, they're expecting more rate cuts. So that means what's going to happen to the equity market? Does anyone know? It will go in which direction? Up. Well done, Michael. Spot on as well. So what actually happens is, yeah, bonds falling, okay, usually means equity markets go up as well. So yeah, so money's got to go somewhere, guys, as well. Understand how sort of world works as well. Just doesn't go to money heaven, okay? It goes anyway. It has to go somewhere as well. So obviously that's why equities are up. So, you know, the market is comfortable with the 1-year bond at 4% and in the US 5%. Okay with that. So they're expecting obviously this to continue at this stage. So that's where it's at.
Yeah, that makes a lot of sense.
Yes.
How do you analyze the 10-year bond, Jimmy? Because
Okay,
it is so far away.
Yeah, 10-year as well. Obviously, the Australian one's at 4.3. Okay with that. So to me, that tells us one thing as well. Yeah, look, I don't go that far as well, Michael, as well, but the 10-year as well. So if you look at obviously the 10-year, so let's cover the US one first as well.
Sure.
If you can bring it back, Blake. Yep.
Yep.
Okay, so the US one's running at around 4.2, is it, at the moment? I can't really sort of see that number. Is it 4.2? I can bring it up. Is it 4.2?
Yeah, 4.27.
Okay, so 4.27 as well. So once they cut, guys, as well, so let's say it's 4.27, they're expecting how many more cuts as well coming out of the US? So at best as well. So let's say they go to 5. Okay, within the next 10 years, they're expecting rate cuts to hit so obviously the cash rate to be around 4.3%. Okay with that. So let's call that around, from where they are right now, you've probably got, 100, 125 basis points as well. Okay with that. So, Yeah, no, exactly right as well. So they're expecting cuts in the next 10 years. Okay with that. So it looks like, the rates are going to be coming down as well, okay? But what's interesting as well, guys, the Australian one obviously never went up as much, okay with that? So pretty much obviously ours is expecting after they do the 1 or the 2, after that, it looks like it's going to be sort of staying where it is, okay with that? So that's what it's really interesting as well about it. So people expecting, rate cuts to keep coming as well, unless something drastic happens or a black swan as well. It doesn't look like rate cuts are on the cards for Australia too much as well. But that's where it's at as well. So the 10 years running at around 4.2, whatever it is, you know what I mean? So that's where it's at as well. So they're not expecting that many cuts coming out of Australia long term as well. So that's where it's at.
Yeah, great. I think the slides are just cutting off the actual value here, but it's sitting at just under 4.1 at the moment.
Yeah, cool. Yeah. Well. So you pretty much get your one cut, and then obviously, the 1 year's at close to 4, you know what I mean? The Australian one, the 10 years at 4.1. So that tells me interest rates are going nowhere at this stage. Even if they do cut an extra one, they'll probably pop it back up as well eventually. So that's where it's at. So it's pretty looking like flat after they do the first one. But the US obviously went up to 5.5% on their cash rate, where our cash rate only went up to 4.35 at peak. So we're 115 points over, okay? So you expect that to cut as well. So the 10-year in the US and the Australian are pretty much similar, okay with that? So you're probably expecting more rate cuts coming out of the US.
Yeah. Okay, great. Makes a lot of sense. It's probably a good time to jump on into the charts, Jimmy, and have a look at some stocks.
Yeah, no problem as well. So that's where it's at as well. So just look, obviously, just based on the XJ, as you can see, there's no sort of breaking point as well at this stage for a bearish trade. So if you bring up the XJ, as you can see, it's just a straight line. As we covered last week, guys, and just a follow up as well. Best way to trade, guys, is always with the trend. Okay, with that. It's very hard, and we all probably can vouch for this as well, guys. It is very hard picking tops and bottoms. Okay, with that. We all try to do it. Okay, we all try and be smart about it, but I find the easiest trading, guys, out there is always follow the trend. Okay, with that. So just do your basic sort of trading. You know, you got your long-term trend, okay, which is up on the XJO. Okay, with that, I did cover last week, you know, higher peaks, higher troughs. So as you can see, the trend on the XJO is which way, guys?
Yeah, it's up. It's had a huge run since the
Huge run.
lows
Right.
the start
So
of November.
what you want to see, guys, if you're going to go against the trend, as I said to you, you want to start seeing, okay, lower peaks and lower troughs. Okay, with that. So if this is the start of a lower peak, okay, obviously going to yesterday and today, okay, with that, and then you get a lower trough. So that lower trough comes in at around 76, 70, is it, Blake? A little bit higher, the trough? Yeah, just there. Yep, just there.
76, 75.
Yeah, 76, 70. If 76, 70 breaks as well, then you probably have a sort of a slight confirmation that we're going down as well. So, but obviously the other factor to keep an eye on is obviously the bond market. Okay, with that. If the bond market starts pushing up as well, then you might be on a short. But at the moment, guys, the trend is up. Okay, with that. Well done, Michael. Definitely up as well.
Yeah, no, absolutely. And I was just looking at how far the XJO has gone up since the start of November, and it's from the low to the high. It's over nearly 16%.
Correct. Yeah.
And you probably, like, if you were trying to pick a top, you probably could have made a case that all these small tops for a time to short, but obviously there's a lot of momentum moving the market up at the moment.
As you can see, between that November, sort of December, it was downtrending, but then it sort of started. You got your first peak, okay, so a bit higher, yeah. So all the way there. So you got your first peak, then you got another trough lower, okay, and then sorry, you got a higher trough just before that, Blake. The next one before that, yeah, that one there, and then you got a peak. So you got your first peak breaking, okay, and then you got your higher trough a bit further down. That's your confirmation to go long. And as you can see, if you did that, you probably would have done okay all the way through. Yeah, go with that. That's it's just basic trading as well. Obviously, you just got to look at the trend right now, guys. There is no short setup at this stage. Go with that. So depends on how you want to trade. If you want to try and pick the top, that's fine as well. But at the moment, as you can see, this market is unbreakable stage. You might get these sort of slight pullbacks. But any pullback at the moment has been brought up as well, and it's been brought up pretty strongly as well. So that's where it's at.
Yeah. Well, something else to look at, Jimmy, and something that a lot of our traders have experienced is call skew in the market as well. Like calls are being traded at a lot higher prices than their theoretical values, which really tells us the demand for traders to buy call options, which is also a great indication around where the momentum is and where the sentiment is.
Yeah. But look, as Blake sort of brought up as well, you can go into a lot of things as well. But yeah, you are right as well. The calls are obviously higher than the puts as well. That's usually a sign, and this is where the website's fantastic, guys, as well. And obviously, I'm glad that you guys are all here. But volatility gives you the key right now as well. So if you look at an implied vol, okay, the implied vol on XJO at the moment, it's running low. So when that's running low as well, you can sort of see the call put ratio as well. So the calls are up and puts are down as well at this stage. And if you want to look at it sort of a bit more shorter term, you'll see that, anything 100 points away from, the puts, there's no value there as well. So that tells me the market is staying up as well at this stage.
Yeah, no, absolutely. Very good. All right. We might jump into some stocks. Last week we covered BHP, Woodside, and CommBank. So if anyone online today missed last week's session, jump onto the website and probably show you where the recordings is under home and under how to videos. That's where we're keeping all of the recordings of these sessions. So have a look for BHP, Woodside, and CommBank. We've had a lot of requests come through so far today. Adam asked for us to have a look at AGL. Jimmy, are you happy to have a look at AGL?
Yeah, no problem at all. Yep, if you put it up, Blake, no problem.
Yeah.
Yep. So if you sort of compress it a bit more as well, just to sort of get where the top is. So go out the other way. So make it smaller. Yeah, that's it as well. Okay, so pretty much obviously you had a a bullish momentum sort of trade as well, but then it sort of obviously changed around, as you can see. So guys, I'm going to throw it over to you guys. What's the trend at the moment? AGL.
While people are answering, Trevor, I've got your question just around screening for covered calls. We did a video on covered calls in the last couple of months. So I'll send you a link to that after the session. And yeah, it was a full hour on covered call strategies and how to find those. So have a look out for that.
Yep. Cool. All right. So everyone's sort of answered as well. So most people have said down, which is correct. Okay. You've got lower peaks, lower troughs right now. Okay. So definitely down at this stage. So look, to me right now with AGL at the moment, obviously on a sort of economic sort of front and obviously how it's doing as a company, they're trying to transition, obviously, you know, with their gas sort of stuff as well. So that's where it's at as well. I still think right now there is some still political pressure on AGL at this stage. So that's where it's at. So it's confirming obviously the downtrend. Look, if you want to sort of look at trades, if you sort of look at the setup as well, right now, if you sort of make it a bit bigger, Blake. Yeah, okay with that. So your resistance is where, guys? Yep. So there, right? Previous peak or the peak of last.
About $9.
$9 as well, and support is on the lower end. Yep.
$7.80.
$7.80, and it's currently trading what above $8 or something. Is that right?
Yeah, $8.45-ish.
So you've definitely got a case to obviously go bearish to that 720 level, whatever it is right now. So that's where it's at as well. So obviously you got your peak, you got your trough. If it breaks that sort of short-term trough, which is a little bit higher, I would be waiting for, depends on a little bit higher, Blake, as also if you go, yep, just lower. So that's your peak, but you've got another sort of little trough just a little bit down. Yeah,
down here.
Just there, yeah, just there as well. So
about $8.30.
$8.30. So if you get a break of $8.30, you've got a case to go all the way down to the support level. Does that make sense, guys? So you've got a bearish trade. Obviously, the sentiment right now on the stock is bearish. Reason being is it, as I kept saying, political pressure right now on these sort of type of stocks at this stage. So they do have to transition. Okay. Obviously, you know, make themselves more, you know, into clean energy and other stuff as well. So we'll be spending, closing mines, closing, you know, everything under the sun as well at this stage, as you guys know. There's a lot of political pressure on them. So for me, you definitely, if it breaks that 820 level, you definitely got a case for $7 at this stage. Now, obviously, if you wanted to do a trade as well, look, this stock tends to go sideways a lot as well. So for me, okay, I find it can go sideways for a little bit and then go, you know what I mean? So it sort of moves as well. To be on the safe side as well, based on where volatility is, and this is where Blake will come into it as well. Okay with that. So if he looks at volatility on the stock, putting Blake under pressure, guys. Look how he's working. Look at him go. Look at him go.
No. I've used this too many times to know where everything is.
No, mate, as well. So as you can see, volatility is where, Blake?
Implied volatility is just over 25%.
25%. And it usually runs around what level?
Probably closer to 22, 23.
Yeah, so
and we can have a look at the IV rank. as well,
Yeah,
which is
and
sitting
like-
at 78, which means that it's higher in relation to itself over the last 12 months.
Correct as well. So in that sort of type of thing, you would be looking at what type of strategies? Would you
Anyone
look at
who watched last week should know.
Yeah. Yep. Call spread. Yep. So is that a bear call spread, do you mean, Michael? I wouldn't be going bullish on it personally. Yep. Blake, is that right? Call spreads, bear call spreads, bear put spreads?
Yeah, so, generally when implied volatility is high, it probably makes sense to be a net seller of options and collect the premium.
Yep.
Because generally implied volatility will restore to its historical average for the underlying stock. So if it's above what it usually trades at, which means the premium on the options are higher, which means that you're going to get more bang for your buck if you're selling premium. That's correct, Harry. Credit.
Well done, Harry. Yeah, correct as well. So that's where it's at. So as Blake said as well, if implied vol is higher as well, so you look at obviously, bear call spreads, okay? Or obviously, depending on that, you wouldn't do any sort of a bear put sort of spread as well, because obviously the spread's low. Look, if you want to sort of pick the direction, but for me, if you're going to do a bear call spread, you should be looking at, depends on how you want to look. I prefer to go a bit more shorter term when I do credit spreads. Okay with that. So let's say we're talking a month out. Okay. So what I'd be looking at is obviously above its resistance on a bear call spread, if the numbers suffice as well.
Yep. So let's have a look at a trade, I guess.
Yep.
So we'll be looking at doing a bearish trade, a bear call spread.
That's correct as well. So you want to receive the credit.
Yeah. Hold on. I'll go to the new strategy builder. Here we go. I'll just bring up the chart again to have a look at where we're sitting.
Yep.
So did you say, Jimmy, you go above?
First I would look at around that level. Yes, correct as well. So I'll look at like a month out, above that sort of level, because I know it's got to be
about $9.
Yep.
For a month. Yep.
So if you look at 9.24, 9.50 spread.
Yeah, there you go. There's probably not a lot of value in the premiums.
Yep. So if you really want to do a trade, you could probably, get away with the 8.75, 9.25 this stage if you want. Yeah, it all comes down to the credit, guys, as you can see. If the credit's not there, guys, it's just not there. Do you understand? Just don't force the trade. I know the other option is to go aggressive on it, okay, and go right at the money. But as you know, you've got resistance at a higher level. You want to try and keep that resistance level as well, because if it gets there, it's going to be obviously, you just want to be able to repair the trade worst case scenario, as we spoke about last week as well. So for me right now, worst case, I'd be looking at, 8.75, 9.25 if the credit suffices. If not, then I'd probably just stay away personally as well.
Sure, yeah. And as you said, Jimmy, it'd probably make a lot more sense for it to see the chart break this support level down here and give you a little bit more confidence to go closer to the money.
Correct. If you do get the break, guys, as well, and you want to go aggressive, just go aggressive where that support level is. So a bit lower, just there as well. So you just do a bear call spread if you're inclined, because then you got a case down to $7. But understand, guys, it is an aggressive trade, okay? And be mindful. You always got to manage the trade as well. So if it does sort of hold back on that support level and just bounce back up, potentially could go back up to $9 as well. You understand? So that's where it's at. So for me, if you're going to play aggressive, that's fine. But you've got to have confirmation right now as well. And at the moment, I haven't got that confirmation break as well on the downside. So that's why I'm trying to choose the upper level of resistance. Yep. Depends on what it is, Belinda, as well. But obviously, if you look at this trade as well, what's the credits right now on 8.75, 9.25? Sorry, guys, I just can't see as well. Like, obviously.
No, that's okay. So 8.75 is 10 cents. and then the 9.25 is 2 cents, so a net 8-cent credit.
Yeah, it's just a bit too low as well. What I prefer to I try to get around close to around 13 for a 50 spread. 15's ideal at this stage. So yeah, look, 8 cents minus all your cost in and out. You know what I mean? It just doesn't suffice at all at this stage.
Yeah, and it's like it's really going to depend on, you know, your level of confidence for putting the trade on. And, you know, like on the system, have a look at where you, like what level your max loss is going to be, what level your max reward is going to be. You've got your risk to reward ratio there too. So as Jimmy said, you know, your sold leg can be closer to the money if you've got more conviction, which is going to give you a bigger credit. And then, you know, like put your protection at a level that gives you enough credit, and, you know, gives you some room for the stock to move a little bit over the time too. So yeah, have a play around with the strikes, and, you know, everyone's different. Everyone has different convictions on different strategies and different stocks. So, you know, like kind of put it together and find the level that works for you.
Yeah, exactly. As Blake said as well, you know, everyone's got their own sort of risk to reward sort of ratios as well. Do you know what I mean? You know, some of us are more conservative, some of us are more aggressive, and away we go. But I'd still think you need a break personally. But I've seen people go for it from day one. Do you know what I mean? So it's just up to yourself as well. But I prefer to be a bit more on the conservative side as well, and that's why I've chosen those sort of risk to support levels personally.
Yeah, great. All right, probably a good time to move on and have a look at the next one. Ingrid suggested JB Hi-Fi, JBH.
Yep, no problem.
So let me bring that up onto the chart. What are you seeing with JBH, Jimmy?
Yeah, look, JBH has been really interesting as well. Like, obviously, everyone was expecting, you know, retailers to get punished as well, a lot, okay? But that sort of hasn't sufficed as well. So what you're seeing is obviously JBH has got a fantastic model. Not a lot of competition out there as well on JBH as well. So obviously, you know, they've covered everything as well. So for me right now, it tells me that retail is doing okay. And there's still money out there. You know, I mean, a lot of people saying, obviously, you know, people are struggling at the moment. But if you look at JBH and their numbers, their last set of numbers were pretty good. Okay. So you're sort of seeing it's sort of holding up as well at this stage. So, look, it can quickly turn, as you know. But at the moment, as you can sort of see as well, it looks like it's going up as well at this stage. Now, the charting front, look, it comes down to same sort of thing scenario that we've been talking about as well right now. Okay. The trend on the stock is which way?
It's up.
It's up. Okay with that. Now, the problem that you got, okay, this is the issue that I got as well right now. Usually when I look at charts as well, I usually identify straight away, is there a possible pattern here? Can anyone see what the pattern is? Yep. Well done, Blake. Well done, Ingrid. Potential head and shoulders is right. So that's where it is. Correct as well, Ingrid. Spot on as well. So you got, you know, potential head and shoulders here, but obviously the trend is still up right now. Yep. Start of the second shoulder could be forming as well. So the way you draw head and shoulders patterns is you draw a trend line from the bottom or wherever it started. Okay. I think it started a little bit higher. Blake, so it's just, yeah, that one there. Yep. Correct as well. So if you draw a trend line and obviously you try and get, you know, the neckline, yeah, somewhere there or whatever it is. So yeah, so I think it comes in around close to, I don't know, what is it, six? No, I don't know, you know, I can't really see. Yeah, just there. I'd probably say
About $60. Yeah.
Yeah, so that's what I'd be going there as well. So that's where it's at as well. So look, for me right now, I don't know. You know, I mean, I'm really mixed with the retailers at the moment. You know, you saw, you know, most obviously, you know, food retailers are doing okay. You know what I mean? You know, Bunnings and Officeworks and, you know, obviously all that sort of stuff are doing pretty well as well. Okay. But a lot of people are turning into sort of obviously the biggest turnaround for me was in that sort of retail space was your Kmart's as well. So people trying to save money as well. So you got your Kmart targets, which is going to become one, as you guys know. Are doing okay as well. So for me right now, I don't know. It's a tough industry as well for me personally as well to look at the retail side. But look, we're here to say potential trades right now as well. For me right now, where it is right now, is this the start of another peak? Okay, as we sort of alluded to, it might be a start of a head and shoulders pattern. So you'll get your confirmation if it breaks that sort of support level. Now, would I be shorting this? The answer to that is what, guys? No. Yep, okay with that because the trend is up. Until I get a confirmation, guys, of a low peak and a low trough, I wouldn't be interested in shorting it as well. Everyone okay with that? Yep, need a break in trough. Well done, Ingrid. Okay with that? So you need a break of that trough, is all that high trough there, sort of Blake sort of thing, which coincides with its head and shoulder sort of pattern. Is that right, guys? Okay with that? So it's a tough one as well. Now, the thing is, to go long here, guys, as well, where's resistance? So up at the top there, the head, yep, just there.
Yeah,
Well.
just over 65.
65, and it's currently trading what price?
62.
62. So have you got enough to make enough out of it as well? Okay with that. I don't know. You can look at the numbers as well for a bullish case to go up to the top. Could be potential double top. Okay with that. That's the only way you'd play it right now as it sits as well on a bullish sort of trend. If there's enough money there as well, you could probably possibly take the trade as well. We'll probably just have to look at the numbers again, and away we go. So that's where it's at. But understand it's a mixed sort of stock as well. So for me, usually when I sort of see these patterns, I sort of personally myself, I'll stay out. Okay. And away we go. But it doesn't mean that it can't keep going up as well. So that's where it's at.
Yeah, great. Well, let's just have a look at the volatility then, and for the sake of doing this, have a look at some potential trades. So I've just brought up the volatility chart, and you can see that it's pretty choppy. JB Hi-Fi is quite a volatile stock. It's sitting at about 21.5 implied volatility at the moment. But at the start of February, which would have been pre-earnings.
Correct. Yep. That's where
it was. Yeah, it was near up above 30% for nearly a good month there as well.
Yep. So you find obviously going into reporting it, actually the vols do jump up. Some stocks obviously jump up as well. So I think a lot of people didn't know how the retailers will go. So yeah, away we go. So pretty much if you're looking at that as well, volatility has been coming off. Okay. Its IV ranking is, I can't see that, Blake, sorry.
That's 42.
42. So in theory, you'd be looking at, obviously spreads again. You know what I mean? So, if you're looking at a bullish case, you probably want to look at, maybe a 63, 66 bull call spread, maybe, or a bull put spread. I don't know. It's just up to you.
Yeah, you're probably a little bit indifferent here with the volatility. You might have a view on some more expected uncertainty in the retail sector, especially as interest rates are expected to move as well.
Correct.
But it's probably in a position now where you're not missing out on value if you're buying premium versus selling premium.
Yep. So for the argument, let's have a look at obviously doing so obviously a spread sort of trade.
Yeah, we'll do a bull call spread, a debit spread.
Yep.
And 65 was the resistance, so the sold leg would be at 65, and the bought leg kind of around at the money.
Yeah, 62, probably just slightly out, 62.50 maybe. You know what I mean? So that's what I'd be looking at.
Yeah. And how do you look at or think about how far out in time you'd like to go for something like this?
I'd be looking at least a month, 2 months out as well, Blake, just to sort of give it time. Look, JB Hi-Fi, if you look at the sort of stock as well, it does move quickly. And as sort of, Blake alluded as well, with interest rate cuts as well, if they do cut as well, it will move up quicker as well. So that's where it's at. So for me, yeah, I'd be looking at 2 months out just to be on the safe side as well. So 62, 60, 62, 50, 66, maybe.
Yep. So I've got the 63 and the 65. We can go up to the 66.
Oh, yeah, just where resistance is as well. So that's where it's at. So
yeah, well, in between 65 and 66. So $1.03 theoretical price.
Yep. Is that for a $3 spread?
For a $3 spread.
Yeah, that's pretty good as well, guys, because the payoff, as you can see, is obviously if it starts moving your direction, you do okay. So yeah.
Yeah, you got a two to one payoff, so risking $100 to make 200. But obviously we're a little bit out of the money, so we'd need the stock to rally a little bit over the next 2 months to see that.
Yeah, correct as well. So that's where it's at as well. So obviously, if you get a bit of a movement as well, you'll make money. But yeah, in this sort of space as well, with the impending rate cuts as well, you probably want to play a bit more of that sort of 2 month sort of period as well. Even 3 months will be okay. Because if they start sort of cutting in the US, you probably, as I said, you'll probably expect more cuts to start coming here in Australia, filter through, and away we go. So that's where it's at.
Yeah. All right. Let's keep on moving. We might have enough time for another 2 today, Jimmy.
Oh wow!
The way that we're going.
There you go.
And just a reminder, if anyone has any questions as we're going through this, type them in and we'll do our best to get to them. Michael had asked for us to look at ANZ.
Yep.
I know you follow the banks pretty closely, Jimmy, and we looked at CBA last week. What's ANZ doing in your eyes?
Bullish, and we'll stay bullish until obviously, look, as I said last time as well with CBA as well, the bad debts aren't coming as well. Net interest margins are doing okay. Look, obviously they're not doing the best. They could probably do better as well. But what you're finding is, with the impending rate cuts as well, will help its earnings as well, long term as well. Now, at the moment, the banks are looking, stronger, and away we go. Now, if I had to choose, 2 banks, I'd probably, my preference are ANZ and Westpac. So that's what it's at. I think NAB's a little bit overvalued personally, and CBA, I think we spoke about CBA last week as well, a little bit overvalued. But look, all the banks are doing the same, and as you know, if the banks are up, okay, the XJO is up as well, because the banks are around 42% of the index as well. So that's where it's at this stage. So at the moment, I'd be staying long banks. And as you can see, based on trends, guys, pretty easy to pick. The trend is which way?
It's up. You can clearly see the higher peaks and the higher troughs since the start of November, which is when the XJO started to rally.
Correct as well. So as you can see, they're all up as well. Okay with that. So that was a turning point as well. The banks obviously got a whiff that, because what happened does anyone remember what happened in November, guys? Yeah, I will as well. I'll try and cut that as well, Belinda. Yep, as well. But anyway, back to my question as well. What ended up happening in November as well? And this is why I said it's very important to keep an eye on central banks. Okay with that. In November, the Fed changed the tune from rate cuts. They started talking maybe that was the top, okay, that was the push, the highest that they'll go on rates as well. So they sort of changed the tune. And in November, the US took off, okay, with that. And then we sort of followed after that as well. So the banks obviously got a whiff of that rate cuts were impending. The bond market started pushing down, okay, and then it was on, as you can see, and we've rallied up. So where we go. And I think me and Blake were here as well. I think the other 2 were telling us that the market's going to crash as well and burn. So anyway, so there you go. But we said that obviously it's going to go up, and away we go. So that's where it's at. So all good. Yeah.
Well, it's easy to praise ourselves in hindsight, Jimmy.
No, but hindsight trading makes the best trader as well, personally. But there you go. So anyway, hindsight's good as well. But anyway, look, going back to ANZ guys as well. Look, we have got a peak. Okay, now you got to be careful here as well, guys. As well is on the possible next trough as well. Okay with that. So if this proves to be a lower peak, okay with that, you've got to be careful with that trough right there as well. So I think Blake's pointed out that sort of support level. If it breaks that level as well, you could possibly be starting to have a downturn trade. Everyone okay with that? So your first level of support is a bit lower as well, as you sort of pointed out, Blake, just a bit lower. Yep, just there. Yep.
2780. Yep.
2780 right now as well, and off you go as well for a short. Yeah, cover that. But right now, guys, as I said as well, is there enough case where it is right now to go back to its previous peak? That's what you got to sort of determine right now if you want to take that sort of.
I think now, if you're going short, you'd be trading against the trend.
Correct as well. So you wouldn't short anything right now as well, but if you want to sort of get a short as well, you need, as I said, a lower peak and a lower trough to get a confirmation. Everyone okay with that? Where the bond market is at the moment as well, I'd be very nervous taking any short position. As I said as well, right now, it's pretty hard to sort of get a top of the market as well. Unless something drastic happens, guys, right now, I just can't see it breaking at this stage. We might sort of go sideways for a sort of period, but the overall momentum and overall sort of thing as well, it looks like it's going up at this stage. So make it easy, guys. Always follow the trend. Okay with that. Now, right now, the current share price is
28.88.
28.88, and the resistance is at the top. Blake, sorry, mate, I just can't.
29.85.
29.85. So you got a dollar spread there, guys, as well. So if you want to take a bullish trade, you probably want to take a 2-month trade again. Okay, and Blake will go into it as well if you would look at a trade.
Yep, I'll just bring up the implied volatility. So IV rank is about 42 at the moment.
Yep.
And implied volatility has been trending up since the start of the year. We're sitting at about 17%.
Yep. It's all relative low as well, correct, Blake? Based on where it trades.
Yeah, I think it'd probably be around the average implied volatility where it trades. So again, you're not missing out on going either way, like buying premium or selling premium. I don't think there's not too much of a difference in what you decide to do. Maybe you have a short-term view on volatility spike as well that you could take advantage of.
Yep. Okay. Yep. Cool. As well. So in theory, you'd probably take a spread trade again, correct?
Yep.
Yep.
Like a bull call again probably fits the bill.
Yeah, bull call, whatever, or a bull put, whichever way you guys want. I don't really care. Just but obviously that's where it's at. So pretty much you sort of want to, if you're going to play a bullish trade, I think, look, is there enough credit there? That's what you got to sort of determine. So, you probably want to play, a 28.50, 29.50 spread, maybe 2 months.
Collecting 50 cents for the dollar spread.
Yeah.
For May.
It's a bit. Yeah, it's sort of that sort of iffy sort of things. Are you collecting enough? You know what I mean? You're paying enough now. Just depends on your view and all that as well. Do you know what I mean? So look, for me right now, I could see the trade there as well. I could potentially go back up there. But as you know, guys, and they're always in the back of your head as well, could this sort of thing turn? Do you know what I mean? So that's where it's at. So for me, I'm not really too inclined to go bullish right here. Okay, personally. Okay, but I can sort of see the case going back up to that top as well at this stage.
Yep. No, very good. Absolutely. Well, we can talk about Santos if you like, Jimmy. I know oil has been the commodity at the top of your trading watch list recently.
It has been, yep, as well. The other sector that I will probably cover as well has been gold as well. I like the gold space here.
Well, that's a good excuse to do another session next week.
Another session,
We can have a look at gold.
Yeah, that's the thing as well. So there you go. Yeah, cool as well. So pretty much obviously with these trade guys as well, as you can sort of see, we had that sort of support level under around $7. Yeah.
Under here.
Yeah. Which one are you talking about, Trevor? Are you talking about obviously Santos or are you talking about ANZ? Yep. Yeah, no problem as well. As we said as well, you could probably do a bull put, no problem there as well, under that sort of support level, if you like. It just comes down to obviously your risk to sort of reward and what the payout is. You understand? I'd probably take a bit more of a conservative view and go a little bit on the lower end. Yeah, that's the support level that I'll be sort of taking where Blake is on the second support level. If the numbers suffice there, yeah, no problem at this stage.
And you probably get a better credit if the ANZ trended down towards this next support level as well.
Correct as well. So if it stops at that support level, then you got confirmation you haven't got a lower trough, okay? Then you might want to take the trade. So and away we go. But look, understand, guys, it's gone from $22 up to around $29, and it's done fantastic as well. So there has to be a pullback somewhere, okay? And then you probably got the next run for the banks, guys. And usually, as I said to you guys last week as well, you got to work backwards as well on these sort of stocks as well. And if you look at it carefully as well, guys, we're coming into that 55-day period, which probably starts around, next week or the week after. So that's where it's at as well, guys.
Yeah. No, but absolutely, Trevor. Makes a lot of sense to do a bull put spread. And as we looked at the volatility, there's nothing there to take a credit. All right, let's jump back to Santos, Jimmy.
All right, so you had that sort of support level, guys, as well. So pretty much that sort of support level, and you had that sort of resistance level. Look, the stock's been sort of choppy as well. So it's been sort of in this sort of sideways sort of pattern between that 7 and 8. Okay. So for me right now as well, why I sort of like the trade here as well. Obviously, oil. If you bring up the oil chart as well, if you've got it, Blake. So I know I'm going to jump let's just cover this, and we'll just try and get into the oil sort of space as well. But right now, why I like the trade was you had a higher peak and a higher trough now. Okay with that. So you had that sort of confirmation off the low there. Yep. So that peak, high trough. So then I sort of said, once it broke sort of that peak, so that, the previous there, the one there. Yep. Okay. I thought there might be a trade up to that sort of 750. And look, I did take a bit of a longer term view because I've found that the oil stocks have been taking a bit slower to go as well. So that's why I sort of suggested a 2-3 sort of month period sort of trade. I still expect this stock to go back up to around $8. Now that's assuming that oil stays above $8. $80 or 75, 80. Okay with that. What I want to start seeing as well, guys, which has been really sort of strange as well, is the gas price to start moving up as well. So it's sort of started to go up a little bit. Okay with that. But yeah, you need to see a little bit higher as well at this stage. But oil has been trending up as well. And it looks like potentially, eventually, if there's still unrest in the Middle East, which I don't think is going to stop in any time soon, you've got a potential for oil going up to around $100 at this stage. That's where it's at. And that's why I didn't mind taking the trade up onto that sort of bullish trade.
Sure. Do you just want to, maybe just replicate the trade that you were looking at earlier in the week, Jimmy?
Yep. Yeah, no problem.
If you can recall.
It was a bull call spread. I think we took a 3-month, I think it was a June trade. Is that right?
That sounds about right. Yep. 90 days.
Yeah, and I think it was a $758. Is that correct?
Yep. Look.
What's that trading at the moment? I think I put
That's a 20-cent debit.
Yeah. So it's July, Belinda. Yep. So yeah.
We can go to July. Yeah.
Yeah. Yeah.
Still about a 20-cent debit.
Yeah, so it was running around that sort of period as well. Do you know what I mean? So expecting obviously to go up as well. So, if it breaks that sort of 750 level, you'd probably start seeing acceleration on it as well at this stage. Yep. So that's sort of, I still think we've got time on this one as well. So I think eventually it'll get itself up to around $8 as well at this stage. The other thing is also as well to keep in mind, $7.58 was a spread. So pretty much what I'm sort of thinking with Santos as well is, does anyone else, or 825, sorry, yep, okay, does anyone else come in and obviously have a shot at him as well? Because remember, WDS and Santos were going to sort of obviously join to a joint venture. Sounded like more of a takeover personally, but the question is obviously, does someone see a lot of value in Santos and come in for a play as well? So that's what's up. So we'll have to wait and see long term. So you'll start seeing a bit of consolidation in that sort of sector, I think, as well, eventually. Same thing in the banking sector, as we're seeing, a lot of consolidation have been happening for the last couple of years. As you know, Suncorp's assets were taken over by ANZ and was approved. So I wouldn't be surprised if it happens in the oil space as well. Yep, yeah, that's right as well, Harry. It was 758.25. That's where it was, Blake, the trade. Yep. I think it was running around 22, 23 at the time. What's it at now? I think I saw it best got over around 32 at one stage.
I was just going to bring up the oil chart, Jimmy. It's one that you talk about quite frequently, just sitting above $80 US.
Yeah, correct as well. So as you can see, it sort of had a downtrend all the way there, and then obviously, it sort of changed trend. Okay. So you had your high peak, high trough. Okay. And you've pretty much got your confirmation on a bullish trade. Now, the key to it all right now is that sort of support level. I think it's around 75. I know you can't put a chart stock there as well, but is that sort of obviously that sort of trough, that false trough?
Yeah, 76, 77. There's a couple of troughs in there.
Yeah, 75, 76 is the key to it all right now as well. And if it sort of stays above that, you've still got a confirmation of a bullish trade. And as I said as well, you had that sort of peak at around 83, previous sort of resistance. Okay, if it breaks that level, you've got 90, and then you've got $100. So I'm okay taking the trade as where we are at the moment and just sitting on it as well at this stage. So I think we're up around over 20% in the first 2 days, but obviously I still think there's potential for, if it breaks to 750 convincingly, I think you've got a case up to $8. We'll do pretty well out of the trade. Does that cover it all, guys?
No, that makes sense, Jimmy, and thanks for sharing that. It just very logical that Santos would go up if the underlying commodity that they produce goes up. So definitely one to follow.
And it had to be down today as well, yeah, Blake. That's what happens, yeah. It's always the case, so there you go. It's all right.
It is. You've got some time for it to play out.
Yeah, I've got time as well, so there you go. So all good as well.
Right.
Excellent.
All right, that just ticks on our hour, which is great timing again. You must be getting good at this.
So, yeah, exactly.
Thanks everyone again so much for joining in and participating in these sessions. It really feels like we should keep going with these, Jimmy. There's a lot of interest in them. Correct. So we'll invite you on to the next session. If you want to watch the recordings of any of our previous sessions or this one, we'll upload it onto our website, just on the homepage under how-to videos. They'll all be sitting in there. So have a look at those in your own time. I know we had a lot of requests that I didn't get to. So we'll have to add a list of stocks. And Belinda, I know you've asked for IGO for a couple of weeks now. So we better have a look at that one in the next week or two. But any questions, any feedback is always greatly appreciated. And thanks again, Jimmy, for spending the time to do this today.
Thanks, guys. Thanks for having me. And I'll see you guys all next week. Take care. See you all.
Bye.